ago, I asked Dave to take out the fact that I was new to the space, new to the NFU, and I've been around for a year now. And I was joking a minute ago that I was about to hit my sophomore slump, but I don't think there's any slumping. I think there's only going up and up with the help of NFU members, and it's always a pleasure to talk to NFU members, especially in Ontario, because that's where I'm located. Um, I think some preface to this, one of the first projects that I worked on by myself at the NFU was preparing a submission to the House of Commons on issues affecting the horticulture sector. And I mainly focused in that submission on failures of current business risk management programs, or BRMs, as I'll be saying throughout the rest of the evening, so it's much easier. Yeah, failures of BRMs to properly support horticulture producers, which was a really good introduction to how BRMs work and where they're lacking. I also think that BRMs come up in a lot in conversation at the NFU these days because we're spending a lot of time talking about farmer net income, which is very much impacted by program payments, such as BRMs. And I think it's important to talk about BRMs as well because it's something that impacts all producers on their farms and in their operations, but it also greatly influences the broader Canadian agricultural system. So Dave, I'm going to ask you to go to the next slide. So my outline for you this evening, I know I said 20 minutes last time I gave an NFU presentation. It took an hour, but I'll definitely keep it 20 minutes tonight. So yes, I'll spend a majority of my time this evening describing the four federal BRM programs: Agri-Stability, Agri-Insurance, Agri-Invest, and Agri-Recovery. And I'll also briefly discuss the Ontario Risk Management Program since we are in Ontario. I'll be providing some commentary on how these programs work, eligibility criteria, case studies, and current status and usage of these programs, both separately and as a whole, towards the end of that section. Um, Dave, I don't know if you'd like to stop for clarifying questions after each slide, or if that's how we want to facilitate discussion, or if you just want to hold on to that until the end. I think that's also fine. But Camille, I would also like to maybe call or ask you to interject if you have any other commentary to add, because Camille, and big thank you to Camille for doing a lot of great prep work for tonight's session, and for gathering a lot of information on these programs as well. After that, we'll move to discuss the NFU's position on the various BRMs, all drawn from decades of resolution making at national conventions to vote on the policy. And all of what I'll present to you is in the NFU policy book, which can be found on the NFU national website and usually can be found by doing a keyword search for safety nets, which is what this policy is under. This is the section that the policy is under. And then finally, just share with you some work that the NFU has done recently on BRMs. Dave, you can go to the next slide, please. Back one more. Excellent, thank you. So beginning with agri-stability, it's usually the largest BRM in terms of the amount of money distributed to producers. Agri-stability protects producers from large margin declines in their farming income caused by production loss, increased costs, or market conditions. Your allowable income and expenses for all commodities you produce are used to calculate um, your agri-stability payments, protecting the income of your farm as a whole. And it works by first of all, you register for the program. That's the first part. Um, but agri-stability payments trigger if your income, pardon me, if your farming income falls below 70% of your farm's recent income or reference margin, which is the key word here. The reference margin is found by calculating your production margin, which is your allowable expenses minus your allowable income, doing that for the last 5 years and then averaging them out. If your income dips below that threshold, which you've calculated by averaging out the last 5 years, you'll be compensated for 80% of every dollar below your reference margin threshold. And I'll go over an example in a minute to help you out with that. I also would like to point out quickly that the Canadian government says that agri-stability protects producers from large margin declines, although it's important, as some of you are talking about insurance, that you will still have a loss that happens, and it's not going to be preventative in any way. And I think that's an important discussion to have when we get into some of the more broader systemic issues dealing with VRM programs. Who is eligible for this program? You have to farm in Canada, file an income tax return reporting farm income to the CRA, filed farming income for tax purposes for all reference years you farmed. So that's referring to your reference margin. Complete a minimum of 6 consecutive months of farming activity and a production cycle unless you experience a disaster. Enroll in the program and pay the fee by the applicable deadlines. And it's worth pointing out that most commodities are eligible, including grains, oil seeds, and specialty crops, forages, edible horticulture, non-edible horticulture, and livestock. And interesting, and I found this out very recently, some commodities produced and processed on farms are also eligible, providing they do not make up the majority of your farm. And in terms of fees, I believe you pay $315 for each $100,000 of reference margin being covered by agri-stability. Dave, if you go to the next slide, you'll see a case study for agri-stability that Camille very kindly put together. Um, so I'll just go through, read through this together. I'm just going to be reading the slide essentially. So this is how agri-stability works in these steps. So if you sell $200,000 of vegetables each year and spend $140,000 on direct costs, you are left with $60,000 of overhead and profit. In a disaster year, you had an estimated loss of $10,000 due to flooding. This brings your overhead and profit margin down from $60,000 to $50,000. Now, if you were to divide 50,000 by 60,000, you would not reach that 70% trigger for payment. Hence, you would not get a payment from agri-stability. But if you were to go from $60,000, which is your reference margin, to $40,000, which if you were to divide 40,000 by 60,000, you would get around 70%. Due to that $20,000 of loss, an agri-stability response is triggered. The trigger level for this scenario is 42,000, and then you take the trigger level minus the disaster year margin. So 42,000 minus 40,000, leaving 2,000, and 2,000 times 80% or 0.8 is 1,600, and therefore you would result in a payment of $1,600 through agri-stability. Dave, we can go to the next slide, please. Okay. Next program is agri-insurance, which aims to reduce the financial impacts of production losses by providing affordable insurance protection. Agri-insurance is a federal provincial producer cost-shared program delivered provincially that stabilizes your income by minimizing the effects of primary production losses caused by severe but uncontrollable natural hazards, of which include drought, flood, wind, frost, excessive rain, heat, or snow, uncontrolled disease, insect infestations, and wildlife. You will receive a payment when you experience a production loss during the year, and agri-insurance contributes a portion of total premiums and administrative costs to the program. The program helps to cover production losses as well as a loss of product quality. Production insurance is offered on a yield basis and an acreage loss basis. So under a yield basis, your coverage is based on actual versus average historical yields per crop. And if it's covered under an acreage basis, your coverage is based on comparing any losses against predetermined abandonment thresholds. These thresholds are based on the crop yields required to meet production costs for a typical field of that crop. A claim may be paid if your yield falls below the threshold level due to an insured peril. Go to the next slide, please, Dave. Excellent. Third, we have AgriInvest. AgriInvest is a self-managed producer government savings account designed to help you manage small income declines and make investments to manage risk and improve market income. Generally, you are eligible for AgriInvest if you earn income from the primary production of agricultural commodities, and provided that you farm in Canada, file an income tax return reporting farming income to the CRA by the final filing deadline, and File an Agri-Invest form reporting sales and purchases of allowable commodities by the final deadline for the program year. Each year, you can deposit up to 100% of your allowable net sales to your Agri-Invest account, and you will receive a matching government contribution on 1% of your allowable net sales. And then I think finally for the federal programs, Dave, I think next slide. Excellent. Agri-recovery. Agri-recovery is the disaster relief framework intended to work with the core business risk management programs to help agricultural producers recover from natural disasters. The focus of agri-recovery is the extraordinary costs producers must take on to recover from disasters. Extraordinary costs are costs which producers would not incur under normal circumstances, but which are necessary to mitigate the impacts of a disaster and or resume farming operations as quickly as possible following the disaster. Further, agri-recovery is intended to respond in situations where producers do not have the capacity to cover the extraordinary costs, even with the assistance available from other programs. Natural disasters, which may be considered under agri-recovery, are those very similar to agri-insurance, but those resulting from a disease, pest, or weather-related event, such as flooding or a tornado. Events which are cyclical, such as pricing cycles, or part of a long-term trend, such as a change in markets, cannot be considered under agri-recovery. Agri-recovery is not a program, but a framework which forms the basis by which federal, provincial, territorial governments can work together when natural disasters occur to assess the impacts and determine whether there is a need for an agri-recovery initiative. When there is need, an initiative is put in place to provide targeted assistance to help with the extraordinary costs of recovery. Eligibility is only available for farms in Canada that have fully taken advantage of the suite of core business risk management programs, which I've talked about previously, the previous three, and are experiencing extraordinary cost due to disasters. And then we'll move on to the Ontario Risk Management Program. Next slide, please, Dave. Yes, the Ontario Risk Management Program, or ORMP, helps producers manage risks beyond their control, like fluctuating costs and market prices. Under the risk management plan for edible horticulture, producers deposit funds into self-directed management accounts, or SDRMs, and the deposit is matched by the government to help mitigate risk associated with farm business. The producer makes a deposit into an SDRM account, and the Ontario government will make a contribution up to the maximum indicated on the deposit notice. Funds may be used to cover risks to the producer's farm business, pardon me. The maximum contribution is based on allowable net sales. To ensure the annual government RMP funding is distributed evenly throughout the program year, government contributions may be made in installments and may not equal 100% of the producer's deposit amount. This means that a producer who makes a deposit later in the program year will benefit the same as a producer who makes a deposit earlier. The first government contribution is made at the time of the producer's deposit. More contributions may be added after the final deposit deadline when total producer deposits are known. Your maximum contribution equals 2% of your allowable net sales. And to be eligible, pardon me, you must have produced at least one eligible commodity in Ontario in the previous year. There are more than 100 eligible commodities, including fruits, vegetables, herbs and spices, mushrooms, nuts, honey, and maple products. You'll also be required to have filed a T1163 form with the CRA or submitted a Statement A to Agricor for the previous year. You must also have a minimum of $5,000 in allowable net sales according to the calculation on your deposit notice. You must make a deposit to your SDRM account, submit a completed deposit request, and a check made payable to Agricor by the deadline indicated on your forms. You must also provide a premises ID number, and Agricor will send you a personalized participation forms to eligible producers in the month of September. That covers the details of the different risk management programs, both federally and in Ontario. I would like to move on to talking about how these programs fit together. So, Dave, if you go to the next slide.
Sure, James, can we just back up for a second? There were two questions in the chat,
Sure, sure.
I think related to agri-recovery, both of them. So the first one was, has there been any discussion around tariffs falling under the agri-recovery program that you're aware of? and Chad made the comment too. Canola and pork are losing their market. I presume he's talking about this being the tariff related to. And I think I'm reading this right, Chad. Would agro recovery help at all with that?
Yeah, that's correct. Like the pork guys are going to be in a lot of trouble shortly, and the canola guys already are. So, how would any of these programs help? Because they're pretty extraneous events that they have no control over. But
Yeah. Both are good questions, and agri recovery would not apply to either of those. It would be agri stability that would apply to that because it's about loss of market. Agri recovery is about everything essentially that is not cost of production related or market loss related. It is quite literally the last resort that you can use, and you have to access all other programs to be able to be eligible for agri recovery. So that would fall under agri stability. Yeah. And there would be payments for that. But one quick note specifically about canola. In talking about the Chinese tariffs on canola, it's important to note that those tariffs are mostly on canola meal and canola oil, of which China imports very little from Canada and is more a larger importer of canola unprocessed and unpressed. So it's something that we've been talking about at the National as we're preparing for a release about that issue. So I just wanted to clarify that quite quickly.
although the canola guys are getting killed, because I mean it's been limit down every day for a week. So
Indeed, indeed, and certainly that has to do with the processors reflecting that market on them as opposed to the tariffs directly. Is agri recovery a program that has to be applied to? Yes. Um, I believe it is something that you apply for, and then an investigation is done on your behalf. But again, I want to bring everyone's attention to this graph, or this infograph, I guess is a better way of saying it. The air recovery, as you can see in the bottom right corner, is in a case where you have rare and severe events happening with extraordinary costs. And again, it is the last program that you have to access. For agri recovery, you have to show that you've accessed all of the other programs and not received enough to be able to cover your costs. That's part of the requirements for being part of agri recovery. And you can see how each program fits in. So as I mentioned earlier, when you're talking about production, price, and input, you're looking for agri invest and agri stability to cover those falls. And then agri insurance is just about production, and agri recovery again is just for the extraordinary costs and rare and severe events. Happy to take any questions now, but we can move on to the next slide. Um, yeah, just wanted to give you all a idea of what program payments have looked like on the national level for three programs: Agri Invest, Agri Stability, and Agri Recovery. On the left axis or the vertical axis is billions of Canadian dollars, not adjusted for inflation. So you see there are some years, just in 2010 or around 2010, you have huge amounts of agri stability payments, and in 2021, similar for agri recovery, totaling about $4 billion nationally. And then I believe I have a similar graph for Ontario, just for you to understand the context in which you're in. Next slide, Dave. And so you notice the agri recovery payments have been very little utilized in Ontario, and mostly agri invest and agri stability program payments being delivered to applicants. Dave, you can go to the next slide. And so here's I redid this graph from a 2018 NFU publication very recently. So you have the share of total farmers in each revenue class. So I have $10,000 to $25,000 at the very low end, and $2 million and over as the other extreme revenue class. And so you can see the blue bar is the share of total farmers in that belong in that revenue class. And then in orange, you can see share of total program payments going to that revenue class. So you can see that even though there's a small number of farms in the $2 million and over revenue class, they are receiving over 50% of program payments um, from the government. Um, and it's broadly the critique of the NFU, and I'll get into this more later, that the way BRM programs are structured currently, they are to the benefit of larger farms taking risks that are subsidized by Canadian taxpayers. But there are other critiques and observations made about the effectiveness about BRMs, many of which come from Agriculture and Agri-Food Canada themselves, um, of which I mostly just have on agri-stability and agri-insurance. So one of the pitfalls of agri-stability is that program payments are not always timely, as over 40% arrived 8 months after the end of the program year. Uh, Producers view interim payments as being unpredictable and as a consequence are rarely used. 1% of program payments are interim payments. Smaller producers who have greater variability in their income are less likely to have their margins stabilized or their expenses covered through agri-stability. Agri-stability requires a large amount of production and financial information from participants, including revenues, expenses, and changes to inventory. Producers must have a sufficient level of financial literacy to understand and assess the benefits of agri-stability for their operation or hire accountants to do this work for them. Program complexity continues to be a major barrier to participation, in particular smaller producers who often need to source accounting expertise. Participants face multiple deadlines in the application process and must follow a complicated and lengthy application guide when submitting information. Producers of certain commodity types are also more likely to benefit as they trigger a payment more frequently, making it worth their time to enroll in the program. And that was one of the critiques I made in um, the submission to the House of Commons on horticulture issues, is that broadacre crops are often better covered by business risk management programs because of the predictable value of their crops. Well, not predictable, but they're less high value per acre as opposed to horticulture. Agri-insurance also has a number of issues. The role of agri-insurance in the BRM suite and the relationship of agri-insurance to the other BRM programs is not well understood by many producers. Recent severe weather events have shrunk premium reserves, placing some provinces at risk of requiring a reinsurance payment from Agriculture and Agri-Food Canada to cover program payments to producers. And this is where climate change poses a threat to the cost of agri-insurance as reserves have been significantly reduced. The average farm spends nearly $10,000 to participate in the agri-insurance program. This is the amount required for average farm to obtain close to 3.5 contracts covering $1 million worth of agricultural products. The average farm is considered to be large, with an expected annual sales of greater than $1 million. The cost of premiums was the most frequently cited reason for non-participation in agri-insurance, 23% of polling, as reported in the results of the 2021 Farm Financial Survey. Um, and I think goes to show that BRMs do not well serve small producers, which I will talk to more later, as more such as more complex operations, such as horticultural operations, which I just mentioned. Dave, we can go to the next graph or slide, which is also a graph.
James, I have a couple questions and others
Yeah.
might too. I'm curious to know whether it's possible through the stats can to break down the distribution of BRM payments by commodity type at all, because I'd be curious to see whether there are certain producers that are more likely to get them than others. And I guess what was my other question? Oh shoot, I forgot it. I'm sure it'll come back to me though. Oh,
That
whether I'm wondering too whether it's possible to find out how many have applied and been rejected, or they've never completed the process of the application to find out like how big that rejection rate is.
hmm
And then
hmm
Max has got his hand.
So on your first question, Dave, um, just double checking my StatsCan pages that I have up here. There are two different tables for farm operating revenue and expenses annually, which will allow you to break it up into crop production type and animal production type. And then you have a different data set for direct payments to agriculture producers, in which you have the numbers on Invest, Stability, and Recovery, which I had in my previous slides, that unfortunately do not break down into farm type. Um, Although that would be worth inquiring directly to StatsCan about. But they are often very opaque with these requests, but still worth a try. And your second question is about data on farmers who have applied and have been rejected. I think that would have to be a Freedom of Information request because I don't think they would be publishing that data. It might be in the review of the programs, and I'll have to go back and double check those web pages, and I can put those in the chat in a second as well, for other people to look at. But I don't think I've seen that data on those pages.
Thanks, James. And Max, do you want to ask their question or comment to James?
Yeah, sure. Just looking at those two graphs, the agri-stability payments nationally or the BRM payments on a national level compared to Ontario.
Hmm
Um, just my perhaps misinformed perception of what farm cash receipts are in Ontario. It seems like Ontario is disproportionately low as a percentage. Is that a correct? Like, or is that about in line with Ontario's agricultural output? Is are Ontario farmers receiving less, participating less, or is that actually a kind of what you would expect to see?
I think it might be that Ontario operations are more complex. So again, I mentioned earlier that broadacre crops benefit from BRMs generally because they're easier to quantify in a lot of ways and much easier to apply for with broadacre crops. And I think what you're seeing in Dave, can you go back to the national? I think this is what it would be, is that big bump you see in agri recovery payments, I would assume would have to do with wildfires and drought that happened around that same time.
I just was looking even like at agri-stability in 2010, being like $8.5 billion nationally, and for the same year in Ontario, we were looking at like what 180 million or something.
Yeah.
So I guess in my mind, Ontario's agricultural output couldn't have been like only what that's 1/40th of the country's proportionality. Like that was more the point I was getting to. So Ontario
Hmm.
farms are not participating in these programs to the same level, or at least they're not triggering payments at the same rate.
Yeah.
That was, I guess, what I was, and I think your speculation that it's because Ontario tends to be smaller, more diversified farms with complicated crops is likely the reason. I was just wondering if I was interpreting the interpreting that hard data correctly.
Yes, I think you're correct. And I think I also want to point out too that the bump in 2008, 2009, and 2010 would also probably be likely to have been impacted by the 2008 financial crisis. And given that a lot of high volume commodities are subject to speculative markets, that I would have also expected to see a bump in agri-stability payments covering market loss or change in market conditions during that time as well. think you're more
I
likely to
think
go ahead.
Oh, just yeah, that answers my question. Thanks, James. I don't know if you saw Chad's comment there in the chat about these programs not taking into account that as farmers grow, your reference margin obviously is going to change quite quickly. And so you're almost automatically disqualifying yourself if your business is growing. You're not, even if you've had a terrible financial year, because you're still going to be above your reference margin. Is there anything in that suite of programs that helps deal with that issue?
I think on the point of inflation, I don't know if I can answer that question, and I think that's something that's worth looking into. But given that BRM payments are going to larger operations year after year, um, I think that might be counter to that point, that even if you're growing and you have a down year, you might still be above your reference margin. I think that might be hard to reconcile with the growing or the payments to larger operations, because that graph looks almost identical to what it was in 2018, since I updated it from. So
Yeah, could I interject there
yeah.
though? I think it's the larger corporations gaming the system more. Because and I know of a personal example where somebody actually did that. So they
Okay.
paid into those programs and then they just changed companies with their farm, filed an extra tax year, showed zero income for that tax year, and then cashed out of the program. So
Hmm.
I
Hmm.
know of large farms gaming the system that way too. So and I think the larger farms are probably more set up to be able to game the system. Um, and they probably would because they're a little more detached from, if the accountant says I can pull this, then I'm gonna do it, right? So
Hmm.
where the smaller farms, if you're continually improving your farm every year and you're getting better at what you do and you're growing your business and your business is strong, then these risk management programs really aren't going to help you because if I do have kind of a bum year, but I'm used to making 100 grand more every year, but I lose that 100 grand difference, and that's a significant amount of income to me, and I would be seeing losses, but it wouldn't trigger those programs.
Right. So you're talking about, and I appreciate hearing that, because I see these graphs and I see that big farms are benefiting from this, but I don't hear about cases where this is, actually happening on the ground, and or in neighborhoods where big farms are gaming the system and using creative accounting to get away with some of this. Um, so then would you want to see then a change in how reference period is calculated then? Is that would that be the solution into that point of
I think just
growth?
my point is it doesn't take into account a business that's growing and expanding and having its own challenges. And none of these programs would apply, to that. And, we can get into discussion on my other point later, but on, how these programs even I don't fit in any of these commodity categories. So I can't even access them even if I wanted to. So,
Yeah,
we're not eligible the way we farm. So that's a whole separate issue, and we can get into that later. But I just wanted to bring up those points, just kind of on the topic of how you're showing how it's, that it's very clear it's disproportionate and the reasons could be fairly complex.
indeed. Absolutely. And I appreciate that very much. And I think that's something that I would like to hear, or I think we would all benefit from hearing from, is how these programs are serving more diverse farm types. Absolutely. Or farming practices even. Okay, so moving on to what the NFU has on its policy books on these different programs. Really, it only has comments on agri stability and agri insurance, and these are passages that I've ripped straight from the policy book. And again, you can find that on the NFU website. You can often find these things by doing a keyword search for whatever you're looking for. So I found this by keyword searching agri stability. It's quite easy, although the policy book can be a bit of a mess. But I will say that if you're looking, you'll find these in the safety net section in the NFU policy book. Um, so I guess the first one that I have was passed in convention in November of 1999, stating that farmers are facing a chronic financial crisis, possibly worsening because of global warming, creating more unstable weather. Present programs, ADA, NISA, and crop insurance, many of which do not exist anymore, anecdotally, are inadequate to address the problem. Therefore, the NFU advocates working with various governments to develop new ways of calculating support levels in programs such as crop insurance, agri-stability, and agri-invest to form a financial plan. And second, November 2019, the NFU urges the federal government to renew agri-stability program benefits to at least pre-2012 levels. And I think that refers to changes made to the agri-stability program, where benefits were decreased in an attempt to reconcile budget issues, I believe, and that's referenced in the NFU policy book as well. Next slide, please, Dave. This one's very simple. Government portion of support for farm safety nets, such as agri-invest, should not be reduced or diverted. November 2013. Next slide. The handbook or the policy book also directly mentions the Ontario Risk Management Program, and I guess atypical of what the NFU does when talking about programs such as these. It shows support, and it says the NFU supports in principle the Ontario Risk Management Program put forward by the grains and oilseeds commodity associations in that province. However, the payment caps to individual farmers under that program must be reduced to $100,000. And secondly, the NFU calls on federal and provincial governments to implement the Ontario Risk Management Program after first ensuring that payments are capped and that program payments are directed first and foremost to family farm operations. So you'll notice a theme, and that's the general critique of the NFU about many BRM programs is that payments over a certain size should be capped to avoid program payouts to the largest farms that I showed in my previous graph. But there's also language in here about being directed to small operations. I'm not sure what the mechanism was, but for that, but the cap on programs is something that's pretty easy to understand and visualize for policymakers. Next slide, please, Dave. And this piece of this last piece of policy from the policy book was passed in 2001 and generally encapsulates the NFU's position on BRMs. Canada's farm safety net programs have failed miserably, strong language, in their professed aims, helping farmers hold on to their land and farms, supporting rural communities, and stabilizing rural economies. Moreover, the actual effect of these untargeted and uncapped programs has been to push away farm families off the land, concentrate land ownership among a small number of large farmers, and facilitate the corporate seizure of control of many farm sectors, including hog production and cattle finishing. And then my final slide, please, Dave. Just some quick work on what the NFU's, or a quick review of what the NFU's been doing on BRMs in the last decade. We successfully advocated for changes to BRM programs, including advocating for the increase of the compensation rate of 70% to 80%. So if you remember, I talked about 80% compensation for agri-stability. It was originally 70%. And if you had been advocating for a long time of upping that compensation rate from 70 to 80%. We've also been advocating for the return of a margin loss trigger of 85% with no margin cap. Different than the payment cap, which the NFU has been advocating for a long time as well, for the reasons stated in the last piece of policy I read. NFU's been advocating for better inclusion of high value per acre and diverse farming operations, generally referring to horticulture in BRM programs. That's what that brief was about. And then advocating for systemic changes to lessen reliance on business risk management programs. And that point is particularly important when talking about climate change and a lot of the climate work that the NFU has been doing and advocating for emissions reduction, climate resilience, climate adaptation, and policies such as the Canadian Farm Resilience Agency. to lessen the impact on farms at the source rather than having to address them as insurance payments, where farmers can still lose quite a bit and wait a long time for payments or be ineligible for programs or not be able to begin the process of registering in the first place because of complications. And I believe that's all I have. Thank you all.
Right. Thank you, James. That was a great overview. Really appreciate you coming tonight and sharing that with everyone. So now we're going to, I'm going to stop the recording here. We might use that recording later on for other folks